Earlier this week, we spoke with Tim Nash about value and values in investing. What does that mean for you personally?
This is Make Better Wealth Decisions, a podcast about financial blind spots, decision making, and how the reality of higher rates, global tensions, and tariff instability impact your investments. I'm your host, John DeGuy, a portfolio manager with Design Securities in Toronto.
Investors often say that they want to invest in a way that reflects their values. And that could mean social values like environmental concerns or avoiding bad things like guns or alcohol or pornography. Oftentimes, people just want to invest using their philosophy. So that would mean active or passive, or with a tilt towards small cap or large cap, or how you diversify within and throughout asset classes. There are lots of ways that an investor can express their values, their predisposition when they go about their investing. It's particularly useful, I think, to talk about it now in the middle of March of 2025, because as of this week, we have a new prime minister. When I spoke with Tim, we were discussing the new book, Values, by now Prime Minister Mark Carney. Now, Carney strikes me as being a man who is, let's say, right for the times, because we are now in a situation where the country finds itself facing an existential threat based on tariffs that have been imposed from the United States that are that no one expected. I don't know how to say this properly. These are the sorts of things that no one would normally expect to have to deal with as an investor. And certainly the political class is scrambling to figure out how to respond to these threats as well. What does it mean for you as an investor? And specifically, this is where the rubber hits the road. Are you going to be nimble enough to adjust your thinking to take into account such as the threats that are now coming from Donald Trump and the Americans south of the border? Or conversely, are you the sort of person who says, no, I am going to have the focus and discipline to stick to my way of investing, come hell or high water? I have an approach. I have a way of looking at things. These are the things that I value, and this is how I'm going to proceed. I'm not here to tell you that you should do one versus the other. I am, however, going to ask you to consider whether or not you might need to change or not, but have a thoughtful reflection upon what you're doing rather than just blithely going about doing things the way you always have. Speaking personally and in my own practice, I have been of the view that capital markets have been expensive, and specifically the US large cap market and as well as the technology market. So both the S&P 500 and NASDAQ have been trading at multiples that are not likely to be sustained. Despite this, and this is something that I've talked about on multiple podcast episodes previously, these markets have remained sustained. They've remained high. They have not done anything to come down from what are oftentimes seen as being generational highs. That what you should know is that high valuations are awful for timing. They do you no good in terms of understanding when you should get out. They are excellent for determining how much risk you're taking. And so the point that I want to make here is if you are concerned about the risk you are taking because of your exposure to North American stocks, but specifically American stocks and specifically American large cap stocks and technology stocks, then you should think about whether or not you could find other ways to take some of that risk off the table. That might mean moving toward international stocks, maybe moving from growth stocks to value stocks, what have you. It could also mean moving out of stocks to some extent as well and into other asset classes, real estate, infrastructure, commodities. You can have some exposure to gold, whatever you use, resources, things that typically do well in inflationary environments and that not only get you reasonably comparable returns, but that are not trading at ridiculously high multiples. That is what we need to think about now in March of 2025 as Canadians, because there is a great deal of risk that has been around for many years, but the chickens are starting to come home to roost. And now we have a flashpoint that is causing that risk to manifest in terms of having the market draw down. The way to make rational, better wealth decisions is to Begin by reflecting upon what you value and what you will do about it.
This podcast is not to be construed as offering specific investment advice. Please consult a qualified advisor before acting. My books, Stand Up to the Financial Services Industry and Bullshift, are available online. If you'd like to meet to discuss how the topics in this podcast affect you directly, please visit my website.